framework for digital currencies. Let's get more on this now with Nadia El-Bilasi in Dubai. She's a senior market analyst at Equiti Group. Welcome back, Nadia. Now, firstly, what's helped lift sentiment heading into the weekend?
Good morning, Taiba. Of course, the good data on the back of retail sales, this is what boosted consumer sentiment. Also, this comes on the back of deals, tariff deals, and also waiting for more deals from Trump as well. So I think the overall sentiment boosted stocks, but I think the dollar surged because the fact that the good data, retail sales, they were strong enough to support that we might not see a September cut. And so the dollar was obviously supported right away. We saw good retail sales data. We saw higher CPI earlier this week as well. We saw that the numbers went up from 2.4 to around 2.8. So again, we're back into these levels that were very close to the 3%, which is very far away from the Fed target. And I think this is why Trump wants Fed Chair Powell to step away, because it just doesn't align with the cuts that he wants Trump to propose, obviously. So this is why we're seeing the sentiment of a little bit of uncertainty in the market, but still, because we've seen that consumer spending is around 45% of retail sales data. So this is why we've seen a little bit of a good boost in the market.
Right, and the US dollar has steadily been returning to the top spot. What's the outlook for the second half of the year, given the current economic climate?
So earlier on, if you asked me this question a few weeks ago, I would say that the outlook for the dollar is still down. However, things quickly changed on the back of good economic numbers that now portray that the dollar could go a bit higher if they do not choose to cut rates in September. Because now we are expecting by 90%, according to the CME FedWatch tool, that we're going to see a September cut. But after the data, this percentage dropped. So now we might see actually a pause for a cut, given that inflation is going up, that the tariff implicated consequences are starting to show up on inflation. I think obviously tariffs do have consequences, and they're starting to show in the reports now, and we're going to see that inflation is going to continue to go higher. We're in summer season, we're in summer plans, so I think all in all, inflation is expected to continue rising, and this is something that the Fed can't, if it works independently, it cannot rush to cut rates at this point. So this gives the dollar some space and some relief to go a little higher still.
Nadia El-Bilasi, senior market analyst at Equiti Group, thank you very much for joining us. Haunted by the memory of Greece's debt